Welcome back to dailycryptotalk.com for a daily deep dive into the crypto markets.
You got it.
Today is Wednesday, November 27th, 2024. Make sure you hit that bell icon below so you never miss an episode.
Yeah, you definitely don't want to miss this one.
Let's jump right into the swirling vortex of crypto news and market moves from the past 24 hours.
Things have been interesting.
Interesting is one word for it.
To say the least.
Before we break it down for you, remember we are financial analysts.
That's right.
But not your financial advisors.
Exactly.
This is for informational purposes only.
For sure.
Let's start with Bitcoin.
Oh boy, Bitcoin.
Took a wild ride yesterday, plummeting to around $91,000.
Yeah, a wild ride is right.
Before bouncing back slightly.
A little bit of a bounce.
Sources are Forbes, CNBC, Investopedia.
Big names.
Why the sudden panic?
Well, lots of factors at play.
What's the main culprit?
Well over $500 million in long positions got liquidated.
Ouch.
Adding fuel to the fire.
You said it.
CoinGlass reported this.
What does this mean for our listeners?
We'll explain those cascading liquidations in plain English.
Coming right up.
Stay tuned.
What are your thoughts on this volatility? Is this a buying opportunity or a sign of more trouble brewing?
Well, the crypto market, is known for its rapid shifts in sentiment.
It sure is.
But this drop seems to be driven by a few things happening all at once.
Like what?
Well, like that wave of long position liquidations we talked about.
Exceeding $500 million.
You got it. When these large positions get liquidated, it triggers a chain reaction, forcing others to sell.
At a loss?
Often at a loss,
Yeah.
yeah, to cover their positions.
I see.
And that can create a downward spiral.
Making things worse.
Exactly. This is why understanding these mechanics is so important for you as an investor.
So should investors be concerned about this dip, or is it a chance to buy the dip?
That's the million-dollar question, isn't it?
It is.
It's crucial to remember that volatility is like baked into the crypto market.
It's part of the game.
Exactly.
Yeah.
And while these swings can be unnerving, they can also present opportunities for those thinking long-term.
What are you looking at right now to determine if this dip is worth buying?
I'm keeping a close eye on the $92,500 support level for Bitcoin.
Okay.
If it manages to hold above this level, it could signal that the bulls are still in control.
Interesting.
But a break below this level could indicate further downside potential.
So it's a critical point.
Absolutely. It's important to watch this key level and be ready to adjust your strategy.
You always got to be ready to pivot.
Exactly.
It's fascinating how even amidst this downturn, we see prominent figures like Jim Cramer remaining bullish on Bitcoin and Ethereum.
Oh, yeah, Jim Cramer.
Suggesting they deserve a place in any diversified portfolio.
He's been saying that a lot lately.
This is according to Cointelegraph and Benzinga.
Both reputable sources.
Now, he's actually been a long-time crypto supporter.
He has.
Surprising, right?
Maybe to some.
Today.
Oh.
Good day. And Bitcoin.com News have reported on this.
Yeah, they've been following his crypto journey.
Should everyday investors be paying attention to Cramer's perspective, given his mixed track record with market predictions?
That's a good question. I mean, you should never blindly follow anyone's financial advice.
Of course not.
Including Cramer's.
Right.
But it's good to consider different viewpoints.
Get the full picture.
Exactly. And weigh them against your own research and risk tolerance.
So due diligence is key.
Always.
I think Cramer's perspective on crypto as a potential hedge against rising U.S. debt is particularly interesting.
It is, because that's a concern for a lot of investors.
Sure.
So something to think about.
So it's all about doing your own research, understanding your risk tolerance.
Yes.
And not relying solely on any single opinion.
Exactly.
Even if it's from someone like Jim Cramer.
Even Jim Cramer.
Now let's shift our focus to a potential regulatory shakeup that's causing a buzz in the crypto world.
Oh, yeah. This is big.
What's the latest?
Well, there are reports that the Trump administration is considering shifting crypto oversight to the Commodity Futures Trading Commission.
The CFTC.
Right. Potentially diminishing the SEC's power.
Wow.
This news has big implications.
I bet.
You can find reports on this from Fox Business Crypto Briefing, Benzinga, and Cointelegraph.
So it's definitely making the rounds.
It is.
This potential shift in regulatory power could be a game changer.
It could.
The CFTC is generally considered more crypto-friendly than the SEC,
That's the general consensus.
potentially fostering innovation and growth in the market.
That's the hope.
What does this mean for the average crypto investor?
Well, one potential outcome is a clearer, more streamlined regulatory framework for crypto.
Something the industry has been wanting for years.
For years. And this could attract more institutional investment. Because major players would gain confidence in a clearer regulatory landscape.
Hey, crypto trader. Intrigued by what you've heard so far? We're just scratching the surface. Head over to dailycryptotalk.com for the full episode and unlock exclusive insights, bonus content, real-time market tools, and so much more. All for free. Your edge in the market starts now. See you at dailycryptotalk.com.